So about a month ago, I made a video called The 7 Levels of Trading, and it kind of banged. Thank you for tuning into that one. But that video had to do with how good you are, the journey from being a complete gambler all the way up to a self-aware professional. This video, however, is different. Today, we're not going to be looking at how good you are at trading. We're going to be looking at what game you're actually playing. If you're new here, my name is Will Johnson. I'm a former professional Call of Duty player who's been actively trading and investing for the last 13 years. So firstly, we have the Scalper. This is the fastest game in town. We're talking seconds to minutes per trade. A scalper might take dozens, sometimes hundreds of trades in a day. I have seen people do thousands, but that's rare. And they're trying to grab tiny little pieces out of the market over and over and over again. And what makes scalping different than almost everything else on this list is you're almost not even thinking. The best scalpers that I've seen operate on pure instinct and pattern recognition because it's happening too fast. You don't have time to think. You're trading hundreds, if not thousands of times per day. So when a setup appears, they are not sitting there actively doing math. They're just reacting. It's muscle memory at that point. So this is really closer to a video game than anything else. Now, there are serious pros to this style of trading. For one, when you do master it, and if you can, it is some of the most consistent income that you can make in trading because you're not waiting days or weeks for a thesis to play out. You are eating what you kill every single day. And as I talked about in the last video, when we were calculating EV, these traders typically have small edge, but a massive number of reps, and it adds up fast. It allows that expectancy to play out each day. Now, for the cons, it's brutal. You're chained to the screen, full focus for 8 to 10 hours a day, and that stress is real. The burnout is real, and honestly, it doesn't scale super well because the bigger your size, the harder it is to get in and out of those tiny little moves without actually moving the market. It's a young person's game in a lot of ways. High pressure, high adrenaline, fast reflexes are required. But if you thrive under pressure and you've got fast reflexes and you actually like the adrenaline instead of being wrecked by it, then scalping might be your game. I dabbled with it a little bit earlier in my career, and it was fun for what it was, but ultimately decided that it was not for me. The second level on the list, maybe my favorite personally, is the day trader. Slower than a scalper, but still fast. You're opening and closing positions within the same session, and the golden rule here is that you are flat by the close. No positions held overnight. When that bell rings, you are in cash, you're done, you go live your life. Now, the day trader's real edge, well, for one, it depends on if you're a system trader or discretionary trader, but ultimately it comes down to really understanding what it is that is moving stocks. And this is going to sound obvious on the surface, but at a high level, it's just whether or not there's more buyers or sellers. That's really it. Now, within that, obviously, there's all of the nuances of pattern recognition, tape reading, and supply and demand imbalances, recognizing key levels. There's a plethora of things that you have to understand within that, but that high level really is the game here. And day trading, in my opinion, is still one of the best ways to grow a small account if, and it's a big if, you know where to focus. You guys have heard me talk ad nauseum about participating in stocks that are actually in play. But intraday trading in that specific context is some of the largest edge I have ever seen in my time trading. And again, the pros of being a day trader, the big one, no overnight risk. You never go to bed wondering if a phase 2 clinical trial is gonna absolutely nuke your account because you don't have a position. You sleep better. And as I get older, that peace of mind is really worth a lot, actually. And for a lot of people, it's one of the main reasons why they pick this style. Now, on the flip side, when you're only giving a trade a single session to work, it's really hard to structure a low risk, high reward trade. Not impossible, it's just more difficult because intraday moves just don't have a lot of time to develop. So most successful day traders that I've seen and work with, they're day trading setups and they're running close to a 1-to-1, sometimes even worse, risk reward, and they make up for it with a higher win rate. So you have to be right more often because you're not getting paid as much when you are right. And that's the trade-off, and a lot of people don't realize that they're signing up for it when they get into day trading. And again, this is not gospel. There are certainly some people who are great at, I don't know, like pyramiding into winners or getting really tight risk-reward trades, and maybe they do get a 2-to-1 or 3-to-1, but in my experience, it's far and few between people who are able to do that consistently and compound for years and years. But all in all, day trading is suited, in my opinion, with those who have great pattern recognition skills, people who want to leave their risk at the office and not carry it home, and people who still can handle the stress of relatively fast-paced decision-making in high-pressure situations. Like I said, on a personal note, day trading makes up a very large percentage of my active trading activity. I absolutely love it. I've always been pretty good at pattern recognition of fast-paced decisions, and I've talked about it before, but something about every single day being fresh, a new opportunity. You're not carrying baggage from the previous day. I love that. I absolutely love it. But sometimes there ain't nothing to day trade, and so you got to increase your time frame a little bit, which brings us to our third level, the swing trader. Now, for the first 7 years of my career, I was primarily a swing trader. And this is where you start to actually slow down for real, because a swing trader will hold positions for multiple days, sometimes weeks, even months in a row. And the jump from day trading to swing trading is probably the biggest stress reduction jump in the entire trading game, because now all of a sudden you have time. You have time to plan your trades, time to do your research, time to actually think instead of reacting in real time while your heart's pounding out of your chest. And what I've seen with people is that time really changes everything about how you trade and act in the market. So pros of swing trading, two big ones. First, the margin for error goes way up, because now all of a sudden you're not making split-second decisions, you're making thoughtful ones, hopefully. And second, now you get real asymmetry on your trades. Your winners have days or weeks or months to compound. So you can actually structure those 2-to-1, 3-to-1, even bigger risk reward trades that a day trader has a much harder time getting. So the math here starts really working in your favor in a way that doesn't on a single session. But of course, there's pros and cons to all of these. And in order to capture that, you got a couple of downsides. So now you've got gap risk. All of a sudden, you're holding things overnight and over the weekends. So when some kind of bad news drops while the market is closed, you can wake up to a position that is gapped right through your stop. And that's the price of admission for holding longer. There's obviously ways to mitigate that, but that's a big risk of swing trading. And secondly, now you really have to start to understand the macro picture somewhat. So what level is the VIX at? What is sentiment looking like? Sector themes, geopolitics, a lot of things start coming into play when you hold for days and weeks, because this big picture forces you to focus on those things, because now it affects your position. So it becomes a natural part of your process. You can't just stare at a chart anymore and block everything else. I mean, you can, but it's probably not going to work that good and you're probably going to hurt yourself. But this is great. It's a great option for people with a day job, people who don't want to watch screens all day, people with patience, people who would rather make a few good decisions a week than 100 frantic ones in a day like a scalper might. And like I was saying, I've been intraday trading mainly for the last 6 years now, but the largest wins in my career, undoubtedly, swing trades with options specifically, but we'll get to that in a minute. First, at level 4, we have the investor. Now we're all the way at the other end of the spectrum. The investor holds for years, sometimes decades, and their entire edge obviously is not timing, it's time. They're not trying to be right this week. They're trying to be right this decade. And then they let the compounding do the heavy lifting that the scalper is basically trying to force through brute reps. But the skill here, though, is really research and temperament. So picking durable, quality assets and then doing the genuinely hardest thing to do in all of markets, which is sitting on your hands and doing absolutely nothing for a very long period of time. It's the lowest stress thing you can do. It's the lowest time commitment. it scales beautifully with capital. It's tax efficient. And honestly, it is the path that's made the most ordinary people genuinely wealthy. Not traders, regular people who just bought good assets and held them for 30 years. Now, the cons of investing, well, really there isn't any, not that I can think of. Almost all of my active trading profits get funneled right back into long-term investments. And many people think that you can't do both, but you absolutely can and should, in my opinion. This capitalistic system that we built, whether we like it or not, that's a whole nother debate. It is set up for asset owners and asset holders to win. So you make money, you buy assets with it, rinse and repeat. That's how you win. Now, how you invest is a different story. Personally, because I already take so much risk through my intraday trading activity, I tend to take the opposite approach in my investing and just my lifestyle in general. So I plunk everything into an S&P 500 index fund, except on, there's rare occasions where a great stock is getting mollywopped for some reason, and I might buy some of that. But for the most part, very, very easy, something I don't have to think about, S&P 500 index fund. And actually, the investor is the perfect person to talk about today's sponsor, Ether.fi. In 2026, a lot of people have got some crypto exposure. You bought some ETH, maybe some Bitcoin, and it's just sitting there doing nothing. It's dead capital outside of your brokerage. The Ether.fi card actually lets you spend dollars on normal day-to-day activities that is backed by that crypto. So your holdings are staying where they are, but you can swipe your card like a normal person and don't have to sell your crypto every time you want to buy groceries. And speaking of groceries, who likes free food? I like free food. Through June 20th, if you sign up with the link in the description, you are getting 15% cash back on food delivery and rideshare. I'm talking DoorDash, Uber Eats, Uber Rides, Lyft, groceries, restaurants. If you can put it in your mouth, you can get cash back on. You can also earn up to 3% cash back on purchases. It works with Apple Pay, Google Pay, and because it is non-custodial and secured by your own crypto collateral, there are no traditional credit checks required. Quick heads up though, the card right now is not available in every state, and when you're using borrow mode, which is basically just taking a loan, you do have to understand that your crypto is collateral and it can get liquidated if it drops hard, which crypto has been known to do that from time to time. Once again, check out the link in the description below, and thank you to Ether.fi for sponsoring this video. Now for our fifth trader archetype. This is the options trader. This one's a little bit different because it's less about a time frame and now it's more about the instrument. You see, because options traders use contracts instead of just buying and selling shares, and the main reason that they do that comes down to one very beautiful thing: control over your risk. Because when you buy an option contract, you can define your maximum loss up front to the dollar before you even enter the trade. You know exactly what you can lose, and that's it. That's the max. And on top of that, on your winners, you also get leverage. So now you can really amplify the upside on a setup that you're confident in and cap your downside risk. So for a trader who already has an underlying skill of picking good setups and picking good stocks, options can solve a lot of the capital efficiency problems that a swing trader runs into. You can express a big idea without tying up a huge amount of your cash, while at the same time defining your risk. But here's the catch, because options sound great, and they are great when used correctly. But whenever you buy a stock, all you have to do is be right on the direction, either up or down. That's it. When you buy an option though, specifically an out of the money option, which is what most new traders gravitate towards, let's be honest. Now all of a sudden you got to be right on direction, you got to be right on time, and you have to be right on the velocity of the move. So the stock has to move the direction that you thought, by the time you thought it would do that, and far enough to actually beat the decay that is actively working against you. So you got three things instead of one. And obviously being right on all three at once is a lot harder than it sounds, and it's a lot harder than just being right on direction. So naturally, it drags your win rate down, and that can be psychologically really difficult, especially for newer traders who've not built the calluses yet that losses typically provide. So options will humble you in a hurry. But once again, for traders who already have that underlying skill set of picking good setups, picking good stocks, and they want to express them with defined risk and leverage, not beginners, but for those people, this is a power tool. And like I said earlier, my biggest wins ever in the stock market have come by way of swing trading, but specifically swing trading with options. Now, this would not be a complete video if I didn't talk about the macro trader. You know this guy. You absolutely know this guy. This is the smartest sounding person in any room. He's got charts on the M2 money supply. He can explain the yen carry trade to you in agonizing detail. This guy has been tracking the Buffett indicator since 2019, and he will tell you with total confidence that the entire system is about to collapse any day now. He trades the big picture. He's trading currencies, interest rates, commodities, the grand sweep of the global economy. And here's the beautiful thing about being a macro trader. When a macro trader is right, they are legendarily right. We're talking George Soros breaking the Bank of England and making $1 billion in a day. Michael Burry and the Big Short guys who saw 2008 coming. When that macro call actually hits, it goes down in history. They literally make movies about you. But here's the issue with a lot of these guys. Being right about what is going to happen and being right about when it's going to happen are two completely different things. And the macro trader, in my experience, is almost always early, like reliably, painfully early. And unfortunately in this business, being early by 2 years is a fancy way of being wrong. You can have the thesis of a century and still get absolutely run over because of that one old saying that the market stayed irrational way longer than your account stayed solvent. So a lot of times what you end up with here is a guy who sounds like an absolute genius on Twitter. He's posting these beautiful, thoughtful threads about the coming collapse while his actual portfolio is down 12% on the year because, he's been short the whole way up. But my God, those threads are compelling. I do still like reading these guys' stuff, straight up. And I will say this, just to be fair, the rare macro trader who actually has risk discipline, so typically somebody who started as an actual trader, somebody who can hold that big thesis but still size it right, cut it when it's not working, that person I have a lot of respect for. The macro view plus actual trading skill and trading discipline is a devastating combination. The problem is that combination is incredibly rare because the personality that loves the big brain macro thesis is usually not the same personality that is good at trading, honestly. But again, when you find both in one person, watch out. They're dangerous. And that leads us to number 7. This is the quant, or the system trader. And this one is always fascinating to me because it's the only type on this entire list that is actively trying not to be human. Every other trader I've talked about here is making decisions in the moment with their judgment, with their gut, with their personal read on the situation. But the system trader looks at that whole process and goes, no, thank you. You see, because humans are emotional. Humans are inconsistent. Humans panic. So instead, they build a set of rules. They backtest those rules against years of data, and then they just execute the rules. No feelings, no overriding. If the system says buy, you buy. If it says sell, you sell. You become the robot. And if you watch my last video on expected value, this is the person who actually lives by it. They are not feeling their way through trades. They are trying to run a positive expectancy system over and over and over and over and just letting the math grind it out. So the pros of this are pretty obvious. One, there's no emotion in the decision. You're just dealing with numbers, which removes, honestly, one of the single biggest reasons most traders lose. 2, it scales, and it can run while you sleep, while you're at dinner, while you're on vacation. The system does not care. It's just running. But the con of this is twofold. One, the upfront work is enormous. Building and testing a real system is hard. It's technical and it's slow. Edges also decay over time. So the system that you built last year, it might quietly stop working, and you've got to keep tweaking. You've got to keep rebuilding. And there's a sneaky one too that a lot of people run into. A system that you don't fully trust is a system that you will override at the worst possible moment, usually right before it would have worked. So the discipline to not touch it is harder than a lot of people think, especially when you go into drawdowns. But for technical, analytical, disciplined people who would rather solve the problem once and let it run than make the same decision 1,000 times, this is certainly a viable choice. But again, when you get into back testing different edges and overfitting and all the different problems that you can run into, it's very easy to think you have a positive expectancy system ready to go, when in reality you don't. Okay, so those are the 7. We've got the scalper, the day trader, the swing trader, the investor, the options trader, the macro trader, and the quant. But which one makes the most money, man? Because that's what we're all here for, ain't it? And the honest answer is going to annoy some people, because it's really not a type at all. The type that makes the most money in the market is the one that you can actually execute consistently. That's it. A scalper who sticks to scalping and they're good at it beats a guy who's a scalper on Monday, swing trading on Wednesday, and on Friday when the market goes down 2%, now they're a macro genius. Consistency in the market is what compounds, and becoming a master of one is orders of magnitude better than being a jack of all trades in markets. I cannot stress that enough. Which brings me to my second question. What type are you? Here's the real lesson of the whole video. Most people who are struggling in the markets are not bad traders. Well, some of y'all are bad traders. No, I'm playing. Most people are good, though. Most people are good traders, but they're playing the wrong game. They got a full-time job, but they're trying to scalp and get back to work, or they've got the patience of a saint, but now they're trying to force themselves to day trade because somebody on YouTube said they had the 30-minute system that was going to change their life. They are actively fighting their own strengths, and in the market, it's gonna make you pay for that big time. Like I said earlier, for me, my career has basically been split between swing and options trading on one side and then intraday trading on the other. And both suited me for when I needed them. So early on, I was doing a lot of gaming. I was in the Optic House and I had a lot of stuff going on during the day. I couldn't really sit down and day trade. So swing and options trading is what I had, and I loved it. These days, obviously, I do have a little bit more time. I'm gonna sneeze. But now I can use a lot of those skills that I built during those gaming days, which is nice. So I think for most people, just pick the one that fits you, not the one that looks the coolest. The one that fits your personality, your capital, and your real life. Trading is real life. Get good at that one thing and you will be happy that you committed. Appreciate y'all tuning into the video, man. Trade smart, be safe, and I'll catch you right back here next time. Peace out, everybody.